Good afternoon, everyone. My name is Patrick Hawe. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. All trades placed by myself are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Please pause the video, read this disclosure in full. I appreciate it very much. Position disclosure. Still long some JP Morgan from whenever last Friday, I think. Took my Q shorts off before the close today. Okay, so let's talk about the markets. What's been happening, what to expect going forward. Because I feel like not too much has been happening. There hasn't been too much going on, but we got some events coming up to look forward to. So S&P has more or less been in a roughly 39, it was like 3,900 to 4,050. And then this past Friday, I believe that was last Friday, what futures made a low at 3,950. So that range tightened up from 3,900 to 4,050 to 3,950 to 4,050. But we were really just in this range with this one big overshoots from the banking drama. And other than that, you can see, SPY more or less a little overshoot here, overshoot down here, more or less has been chopping 400 since the middle of February, which is, whatever. Good, not really bad. Makes for some good trading in some ways, makes for swing trading in either way pretty hard. So then zooming forward to this week, so futures, let me pull up actually I don't really need to. So futures finally broke out of 40.50 this week, which was that upper area. It came out to roughly 400 on the SPY. I kind of want to just double check though. Nope, that's the wrong thing. Just comparing it to the futures chart real quick, if I can quickly pull it up. Might be able to pull it up easier here. My computer's always so slow when I do these meetings, so I apologize. So you can see here, not perfect, it's never not perfect is never perfect, but for this 40.50 that we kind of kept butting our heads against, and we maybe almost broke it back early in March. We almost tried to break it, then we had the banking drama, overshot to the downside, and then finally as of yesterday, we had a nice day yesterday from 4,000 to close, I think we closed 40.60. This morning traded up to 40.90 or so. So we're finally breaking out of this 40.50 in the futures. But we're doing it in a weird, slow, unexciting way. So it's, you'd think I'd be coming in woo, S&P's breaking out. And that is true. But the action this week has been pretty poor intraday. It's been so far an entire week of gaps and chops, starting with Monday morning. I believe we gapped up Monday morning. 324, 327. So this is Friday. 324. This is Friday. So Friday morning we gapped up, chopped all day. Wait, did I just say that right? Yeah, Monday morning. Monday morning we gapped up, chopped all day. Tuesday morning we gapped down, chopped. Wednesday we gapped up yesterday in a big way, and this is where futures had our breakout, but most of it occurred pre-market. Gapped and chopped, kind of melted up into the close, and then same thing today. Literally every single day this week, decent gaps, and then just kind of garbage intraday action. So yesterday and today, both decent gap ups. And then today we had a little bit more of a rollover. I guess, talk about that a little bit. Some of us were looking for a bit of a rollover today. If you look at the first, say, half an hour to hour of the day or so, this is what the SPY was doing. Opened, chopped around, tried to go higher, tried to roll over, tried to find a bid, while SPY was holding up really, really, really well. VIX was pretty much going straight up throughout that process this morning. So after the open, you can see here is 9:30. So here's the open. SPY chops, chops, chops. VIX goes up, up, up. So VIX deviated a little bit today. We were looking for a rollover. That ended up happening. That deviation then negated itself as the VIX rolled over into the close. And the market ended up being okay. But so that's that's really what's been happening. It's been a little bit difficult unless you're swinging longs, for sure, just because, again, this intraday action, literally every single day this week we have gapped and then just had choppy intraday action. But the end result is that futures are breaking out. Like the S&P is breaking out, and it's breaking out from gaps. There's not really any gaps in it. So like SPY, I know SPY has a gap here, this and that. That gap is not, and this is why I look at the futures too, that gap is not in the futures. So could SPY fill that gap in the future? Yes, for sure. But that's not something I'd be really banging the table on that needs to fill. Just because, again, that's not a gap in the futures. The futures is like a nice, clean, big green candle from 4,000 yesterday. So that's the market. It's breaking out in a really slow, weird kind of way. And I know Derek spent a lot of time, so I'm not going to talk about it a lot, but Derek went over the whole QQQ versus IWM thing that's happening. And that can only press on for so long. So, does more banking drama come out? Does the IWM have another leg down coming? Possibly. But if not, and the IWM wants to try to actually make a run back to 180 plus, and everything else is, then, well, what if the IWM goes up? Does that mean the Qs are going to go down? Perhaps, but the Qs are just looking so bullish that they're almost at risk of like having some type of blow off top. Not that big top is going to be like the top or anything, but just it's getting to that point. And you can just, the way these tech stocks were holding up today, like Apple's a day two up, it's extended. Could it keep going? For sure. But it's just this big tug of war going on. Again, I know Derek spent a lot of time going over it between this Q relentless buying in the Qs, as opposed to the IWM trying to figure out, is the drama over or not, basically. And that leaves SPY with a big tug of war that ultimately is getting resolved to the upside, because the Qs, have a higher weighting. The Qs are, a bit more important for the SPY, and the IWM's been trying to hold in. So that's the market, but we do have we haven't really had too many big events besides the Fed that I can really think of off the top of my head that have moved us in a big way. But we got some events coming up. So this gap and intraday randomness is not going to last forever. Hopefully it's over sooner than later, but intraday action's been a bit annoying. So going forward, tomorrow we have So coming into today, we're slightly overbought. I don't want to say we're overbought because we're also kind of breaking out at the same time. But I think I titled the video SPX strong but slightly overbought going into PCE. So this morning, short-term tactical sentiment was just about in the red. I think I can pull that up real quick for the YouTube people. So there's one of our sentiment gauges that we look at based on a few metrics. Put to call is very important in that. And that's as of yesterday's close. So we're just about in the red zone as of yesterday's close. We haven't really been here in a while. And you can see, honestly, from this graph too, each dot here is a day's close. You can see it's been weeks since we've gotten a signal either way, and that signal that we got either way was the banking drama, which was a buy signal. Last sell signal we got here was like, I think early February, which is when we had this. this big move, like big move. And then when you see that short term like push in the red for multiple days, that's when you get this, where it's almost like spies like here or something. Where we're overbought for sure, but you can gap up and go up another day or two. So we have PCE tomorrow. I have a feeling short-term tactical sentiment is not going to be unchanged, won't be changed too much. It might be a little down because we had that intraday pull-in, but we managed to close decently. The VIX managed to roll over. It'll probably be slightly down. But if we gap up at all again, we've been very gappy. So if we gap up at all again, we're going to be in the same situation that we were in today going into tomorrow, where we're slightly overbought, but we can push a little higher. But then we're going to have this binary event at 8:30. So number comes out at 8:30. If we are gapping up and then we go up on the number, we're definitely going to be overbought. If we gap down, we're not as overbought and we're more neutral. And then if we gap down and we go up on the number, we go from a little bit more neutral to maybe overbought, but at the same time, that gap down will correct us and cool us off a little bit. So that will be healthy. And then if we gap down and go down on the number, that's probably just going to be annoying because it's going to be a missed short. You kind of got to be short into it. So yeah, tomorrow will be interesting for sure. The intraday action again has been very choppy, very weird. It's single stock selection. It's not sector selection. You got Google going straight down and Amazon going straight up, and it's very selective out there, which makes for some weird intraday action. So we got PCE tomorrow, and then we have some bigger stuff next week. Not that PCE is not important. It definitely is. But then next week we have manufacturing PMI on Monday. We have ISM manufacturing PMI, ISM manufacturing prices Monday at 9:45 and 10. Then on Tuesday we have JOLTS, which is definitely going to be important for sure. And then Wednesday we have ADP at 8:15 in the morning, and then Final Services PMI, ISM Services PMI at 10. That'll be important as well. So yeah, I feel like, I don't know, this week's been weird because we didn't really have any events, I feel like, to really cause us to break up or break down in a big way. And the end result is we're breaking up, but we're not really, again, like we're breaking up we gapped up. Like the futures broke out, but it happened in a gap. And then yesterday was choppy. It managed to close well. And then once again today we gapped up. Today was choppy and we closed well, but where we closed was pretty much done in the gap already. So because we haven't had any of these events and now we're like breaking out in this weird way, it's this situation where these events could fuel us and we could rip in a big way, or it could just kill this breakout. And that doesn't mean we break down. It just means we get back into 4,000 chop, which would be a little bit annoying. But it is what it is. It's a market where really no one knows what's going on, from me to you to Gunlock to Powell himself. And everyone's trying to figure it out day by day. And yeah, I think that's all. Let me just take a look real quick too at how the VIX and VVIX closed today, because the market closed well. Looks like the VIX closed poorly. No, it's an 8 to the downside. Tomorrow is going to be a 9er to the downside for VIX, but that did close poorly. Nice tail there that rolled all the way over. The VVIX also looks like it closed poorly, and also looks like it's going to have a 9er to the downside tomorrow. So that's another layer of probability for, maybe if you've been waiting to buy the market, maybe don't buy everything you want to buy tomorrow on an up PCE number, because again, we're slightly overbought based on a few different metrics. And now you got VIX and VVIX downside 9ers tomorrow as well to just add on to that. Doesn't mean they're gonna bounce. It just means downside might be getting a little exhausted there. So yeah, so that's all I really got. We're looking good. If we go up too far too fast in the next couple of days, though, then we're gonna be overbought in like a real way. So yeah, I think that's all I really got. Happy to take a look at any questions you guys have. I don't know. I wish I had like a little bit more to chat about, but it's been like a slow markets move. This like the S&P is breaking out on what has been the quietest, slowest week in what seems like many months, honestly. So yeah, I mean, it is what it is. But yeah, happy to take a look at whatever you guys are looking at or talking about. Let me just pull up YouTube real quick. What's up, Joel, on YouTube? I see you. Let me look in the VTF first. I'll scroll up. First one I see is from Dave S. At this point in time, XLF seems like it's found a range. It's going to trade broadly, speaking in my opinion. Yep. I mean, obviously, you know, whether the peak drama is done or not, I assume the total drama is not done there yet in the banks. I have a cost basis around the bottom of the portion of the 30-32 range. Very nice. Took the opportunity to sell some more calls against my position today. Great job. You want to do that on up days. I like what I'm reading so far. That already came down a little from the down move today. Do you think this range will hold until the start of the banks kicking off an earnings season? I probably see it holding if no drama comes out. But that drama could be either way. Like, it could be good news, too. Like, you could get good news that comes out that gaps these up in a decent way. You could also get bad news, obviously, that shoots them down. If nothing, you're probably going to be right. You got room to this 21 EMA, but more than likely, you're kind of stuck between 32.50 and 30.50 until earnings season. So yeah, I like what I'm doing with JP Morgan. Again, I'm willing to buy some back. Like I've been saying, 127. I'd probably buy some back if it hasn't even gotten down there. It's holding up well. I'd probably be all out if I saw 132, but it doesn't seem like I might see that either anytime soon. This might be stuck. So yeah, I'm planning probably on just sitting in that until, or we'll see what it's like at earnings. We'll see if it trades lower, if it trades higher. I would think risk is to the upside, but just anything could come out. I love everything that you're doing. The trading at the bottom of the range, selling calls when you're up. Hope maybe cover some of those calls tomorrow if we're down at all. Yeah, I love everything that you're doing. So yeah, just I would stay there, and then we'll see if more news comes out or anything like that. But risk is probably to the upside, so I like it. But yeah, I probably don't see it. I don't really see it breaking in like a real way unless better news comes out. But that's a real possibility that we get better, good news there too. Tate was unable to fix his scanner. Oh boy. I don't know what we're gonna do. No, just kidding. That's a cool scanner though. Yeah, even on it, even 6s and 7s or whatever, it's still interesting. It's still, should be 6-7 days down. So definitely keep posting. A couple questions from Kyle. If I had bought EVGO at the open, was the right stop 6, or could you have used the 6.5 opening low on the daily? I noticed 6.5 was also resistance. Just want to make sure looking back. Yeah, so I think 650, well, I guess 6 and 650 is what we talked about. Pre-market. Looks like pre-market it was trading. It was quietly getting bid up to 650. It pretty much opened right at 650. So, just want to read your question. Just want to make sure I'm looking at these breakaway gaps right. Yeah. So. I don't know. I wasn't watching the tape on the open or anything. I don't know what it looked like on the open. If it just exploded in volume right away. It's definitely hard right on the open when those trigger, when it's not, the EDMA isn't caught up at all, but sometimes those are the best. So it depends. I mean, it depends how you want to go about it, Kyle, honestly. You could, one, if it's opening right at the level, definitely be looking at the tape. Look for that burst of volume. I can see the volume is very clear there. Derek's not here. He's driving to the airport, so he can't stop me from pulling up my 1 minute chart. But this is just for volume's sake. But look, yeah, the volume. I mean, the 1 minute volume. So, like, it looks like immediately right off the open, the volume was you just eyeball it compared to what it usually does. I mean, this volume is 100 times bigger than what it usually does on the first 5 minutes. So that's what you want to look for something that's going to go right away. Is that like super big volume compared to what it usually does. So yeah, you can buy the 650 level if the volume's there. And then you just have to keep some things in mind, like it is gapping up. The 5 minute EDMA is not going to be there. And what I'm trying to get around to saying is be willing to try this probably more than once. In hindsight, you could have bought full BP at 650 with 1 cent risk. In reality, that's just, you're like never going to do that, like ever. In reality, I think how you should look at it is, okay, it's opening at the breakout level. I'm going to look for volume to come in. Maybe it's a gap and go right away. If the volume comes in right away, I'll try to buy as close to 650. But sometimes, like, if it's right at the level, you can't bid 650 here. Because if you're bidding 650 and your bids getting whacked, it means someone's dumping their stock to you, that's not supposed to happen if momentum's going to come in. What's supposed to happen is it goes and goes and goes right away, and you either you either take that ask or you're not getting filled. So with that thought in mind, you come in and you say, all right, like I'll look for the volume. It's right at the level. If it goes, I'll try and buy through the high versus the low. So that's sometimes what I'll do with like earnings names. You wait, give it a little bit, whether it's a minute, 30 seconds, 2 minutes. It depends on the name. It depends what the tape looks like at the open. This looks good right away, though. The volume was there right away. So I think you could have waited 30 seconds, seen all that volume, seen it over 650, and I think you could have bought it versus the low, and that would have worked. But in the future, for plays like this, for gap and go plays, I think you can say, all right, like I'm going to be ready to buy this pretty much right away versus the low off the open versus the opening low. If the volume's there, you try that. That doesn't work. Then you say, okay, now I'm going to wait for the 5 minute, something, either the 2 or the 5 minute EDMA to catch up to the low. And if the volume picks up and it goes back through 650, I'll try it again there. And, if that doesn't work, then like maybe the 15 minute EDMA back through 650. With the point of that being that all of your trades should have some good risk reward there. You're risking 1 to make 2, 3, 4, 5, 10. And by the law of mathematics, if the trade works, you should be able to try it, 1, 2, maybe 3 times. And if it really works, you'll still get paid. So, long answer to that, but it's because you're going to see this trade, you're going to think, and not you, I just mean like, I don't know, new traders. You're going to see this and think, man, I should have bought 10 billion shares at 651 with a stop at 650, but like that's just it's just not going to happen like that. So yeah, I think that's how you want to look at the gap and go play. The level is very important. 650 was the level. You need the volume for confirmation. This one was about as good as it could be because it happened right away. But sometimes you shake around, and you need that moving. You need to, like, sometimes you go up. It suckers everyone in or whatever. It goes back down. Everyone gets stopped out because they bought through the low versus the opening low. Then it touches the 5-minute ADMA, and then it V-bottoms back up through the level. And everyone that gets stopped out has to buy back in. Everyone that's short gets squeezed back out. It's almost better when it does that. So yeah, I hope what I'm saying made sense, because I don't want you to see this and then in the future buy off the open versus the opening low, get shaken out within 5 minutes, and then 30 minutes later the name's making new highs, and you're like, well, it broke the opening low and I got shaken out. And you look back and it's, well, it broke the opening low and it shook you out, but then it retook the level with volume. So, above the level, good. Below the level, not good. But then it's above the level, so then it's good again. So yeah, I hope all that makes sense. Sorry for the long answer, but yeah, hope that makes sense. Could you maybe explain why Derek felt EVGO was a better buy at 10.05, even though it leaked below? It does not matter if it goes below. I mean, if I want to even be like super specific, I could say it didn't really even close below. Like, it's just an overshoot, which that's like a big part of what I try to incorporate into trading these days, really respecting that the market is not perfect. Levels do not have to perfectly hold. Things do not need to perfectly hold. Everyone who is not blind can see a 5-minute ADMA, can see a 200 SMA on a chart. Like, everyone can see what you're looking at. So, you got to have like a little bit more to stick with your conviction. So, like, you're saying this kind of leaked below, but that's fine. The slope is up. The volume is there. It's above the day low. It does not matter. Really, honestly, to me, that this could have overshot it down to in the 660s, and I'd still tell you, well, it traded back into equilibrium and held the low, right? Like, it's equilibrium. It's not just the ADMA. It's kind of equilibrium in general. So then on top, so yeah, you get the first touch of the 5-minute ADMA, an inside 5. You get an inside 5 and up to define your risk. So instead of trying to build in versus the day low, which is a lot more risk, this is a bit tighter risk, so you can tighten risk up there. Because otherwise your out at this point is still the day low, so you got to build in versus day low at least. So I would say that's why Derek thinks. Just making sure I read your question right. Yeah, but that's why. Don't worry about it, leaking below, because I see people do that all the time. Not really in here because we're pretty good, but I see people do that all the time. They like buy at a moving average with a stop 10 cents below the moving average. Like, those stop robots are gonna eat you alive and ruin your career if you just try to do that. Gotta give it the room. Gotta give it the space to breathe. 15-minute hammer. Still extended on the 15 there. But yeah, just inside 5. Inside 5 and up. With with moving average catch up, volumes there, breakout. It's a nice trade. It would be better to just get it right off the open and then have sold some in this rip, and then you already have a profit cushion. But yeah, either one of those. Hope that makes sense, Kyle. Take him out his email. Based on what I am saying, blow off top scenario, even if we get soft PCE number, we should watch for it. Yep. We should have a very strong 5-minute candle followed by a downtrend all day. I could see that QQQ. Fill the gap at 322. Yeah, I mean, we'll see where our ADMAs are going to be tomorrow. I'm assuming QQQ is going to be somewhere around maybe like 311, 312 even. So yeah, if it's around 311, 312, that $10 extension would be up at that gap. 320 is definitely should be some resistance, but I do see the gap you're talking about too. Yeah, we'll see. We shall see. Blow off tops are crazy, crazy. Honestly, the last real one I feel like we saw was that one we did like last year. Was that last summer? No, it was 2 summers ago at this point. It was after the COVID bottom though. This one right here, we caught this top like really, really well, but it took me 2 to 3 days of averaging and fighting, not fighting, but kind of building into Qs. But back there, like that's a real blow off top. It's back after the COVID bottom. Yeah, this, yep. And this was that last 3 days, like it was just VIX up, market up, green VIX, green market, just a pure divergence in your face. But it lasted for like 2.5 days. So if you're just shorting with no out, full BP, and you don't have room to add or anything, then you're probably pulling your hair out on this day just to get it wiped out. But that's how blow off top. That's how blow off tops end too. So it's not necessarily a good thing to have a blow off top, even if the market goes up during it. It's usually followed by a pretty hard pullback. But yeah, we'll see, Mike. We'll see. At 320 is definitely a big level though. 320, 322. Hey Pat, when you build into a swing or an extension trade, do you get heavier in each fill? So that's what you're supposed to do, Ricky. I'm trying to be better about it. It's scary to do, but I'm trying to be better about it. But yeah, usually I do like. Honestly, usually what I do is just. It's not even a percent really. I've been like trying to think of like how to explain these extension trades because you can't really. It's hard to like not have an out, but also measure what you're risking to lose. It's almost like you have to go into it like, okay, the max loss, like there's no way I should lose 1,000, but you're not trying to make 1,000. You're like trying to make 100, but if it gets worse, then you're gonna be down a couple hundred, but then you should be getting heavier and you should make a couple hundred. Like you don't want to risk 1,000 to make 100. That's dumb. But you need to be able to size accordingly. So that's kind of like how I approach it. Like my first go will be like, all right, I'm gonna make like kind of this small, cute amount of money, little lunch money, and then if it keeps going and adding, then you start to get bigger, and I start to be like, all right, I'm maybe gonna make some real money here, and then on like the third or fourth time is when I really should be like, I don't know, say like just simple math. You do 500 shares, then you do 500 shares, and then usually I'll do like another 500, and I'll be kind of getting nervous, like, oh boy, here we go. And I'll usually end up okay. But that like third and fourth, 500, 500, it really should be like 500, 500, and then the third should be like 1,000, like an even bigger size, with the idea of it being in pure extension, still going straight down or straight up. Because again, the idea with extension is, okay, this thing's gone down 5 straight dollars. The next dollar is up, the next dollar is most likely up, not down. It goes down another dollar, okay, $6. Well, that doesn't mean the next dollar is, now it's all just ruined. It just means the next dollar is even more likely to be up than down. Right? And if you can size it right, you can trade out of it always, but it can be scary in the moment. And the biggest thing I think that I fixed for myself with doing that is whatever like your max size is, like don't even get close to it. Like don't get close to it, but just don't even get close to it. Some of my biggest losses in the past was doing this, and I would always get too heavy too early, where I wouldn't necessarily get too heavy too early, but I'd be like, okay, this is like the max size that I can do. And I would get to that max size and it would still push a little more, right? Like they like to push it a little more. So I would get to that max size, and then instead of adding more size, I'm at like barely adding because I'm like terrified or I'm beyond, you know, in trouble at that point. So like if your max size is 1,000, don't start with 500, because by the time you get to 1,000, you should probably be adding another 1,000, but you're probably in a bad situation at that point. So if your max is 1,000, then start with like 200, and then do another 200, and then you do like 300 or 400, you're just yeah. But that's been a big thing for me, is like whatever your max size that you want to do, lower it. Lower it. Yeah, yeah. I hope that makes sense. To anyone in the room, the yellow, oh yeah, yellow ADMA, orange is 21, purple. The purple is the 50 SMA, and the brown is the 200 SMA on this chart here. Oh wait, sorry, that my mouse right there. Yeah, the purple is the 50, and the brown is the 200, which we got the big golden cross. The big golden cross, something I have never paid attention to ever. Yeah, the assuming you're early thing is so big. It's like it's partially like assuming you're early, and then just don't try to make as much money, which that correlates with the sizing. Like, don't try to make, a fat whatever $1,000 on your first entry on the scalp, unless you're willing to be down like 10K or something like that. Just try to just make the cute money, because these things happen all day every day. So just add up that cute money. And then when you do that, then you can also scale up, like this stuff where it's infinitely scalable pretty much. I mean, we're trading like the biggest names, so you can scale up too once you like really figure it out, which feel like I'm getting close to, but still working on it. You replied to my email about the Lightspeed demo. Do you typically look at email replies? Yeah, I do. Yeah. I yeah. What time did you email me back? I don't know if I missed it or something. I definitely answer my emails though. But I'm probably gonna answer you much faster in the room than an email. For example, if you have emailed me within the last like 2 hours, I probably haven't seen it, because I've been busy with you guys and stuff. But yeah, definitely feel free to email me. I'll definitely get back to you. And if I don't get back to you, email me again. Feel free to bother me. That's fine too. But yeah, I don't know if you have any like questions about the demo here. Feel free to ask too. Pat, this is fantastic. Could you take us through an actual trade? Yeah. When do we have an extension trade in? I didn't really I was short in the Qs today, but it wasn't on intraday extension. Was that? I can't even remember now when we had that QQQ extension trade. It has to have been one of these days, I feel like. Oh yeah, it was this day. Okay, so what day is this? Thursday. that when like Yellen spoke or something? I remember I went long the Qs. I believe it was in this flush, and I remember I was out like here, and then Yellen or someone said something that ripped us higher. Pretty sure that was Yellen. So basically, I'm looking at the Qs, and I'm seeing, they're getting downside extended on the 5. I don't want to switch to the 15 and the 30 right now because I'm gonna have to go back and forth with the time frames. But 15 getting extended, 30 getting extended, 5 getting really extended. So on this bar, the Qs are trading down from 308 to 307. Looks like low, 307 or so. On this bar that the Qs are trading down from 308 to 307, the ADMA on the 5-minute at this point is up at 309. So you're over at the bottom of this bar at 307. You're $2 extended from the ADMA. You've also just rolled over more or less straight from 312, arguably even from like 313s. You had this little blip here, but you pretty much rolled over. And that's what I mean when I say it's important where you came from too. Like if the Qs are at, if the Qs just sold $2 but they did nothing, that's different than the Qs are $2 extended but they've also just sold, whatever, like $5-6 or so. So Qs have rolled over from, call it 312 to 307. That's 5 points. So $5 of straight down. Then at 307, you got $2 extension from the ADMA. When you're extended from the ADMA, you can expect to bounce back to the ADMA. But as I tell you guys, you don't need the ADMA, because what's going to happen is you're going to get these 5-minute choppy bars, and over time that ADMA is going to be 50 cents lower than where you were first targeting. But basically what I'm doing is, again, and it's not this like exact 5, exact $2 or whatever. It's kind of just, it depends on the situation. It depends on the day. It depends on what's going on. It depends why we're extended. But this was just kind of brutal extension that always, extension always bounces. Like brutal extension, it always does. So your $2 extended, $5 rolled over. I think I only got one buy here, so I didn't even like make really too much money. Like that was just a lunch money buy because I only got my first fill. But I'm basically saying, okay, you got $2 of room up to the ADMA. You rolled over $5. The next 50 cents to dollar is up, not down. And if it is down, then it's even more probable that the next 50 cents to dollar is up, not down. And 50 cents to a dollar is just fine. It's the QQQ. You can take virtually as much size as you could possibly want on the QQQ. And if you could do that and make 50 cents a day, I'd do that all day. But it's not easy to make that guaranteed 50 cents or a dollar or whatever. But so I'm basically saying, okay, next dollar's up. I'm going to start, I think I started like upper 307 saying, lower 307 saying, okay, lower 307s were $2 extended, next 50 cents to a dollar is up, not down. If I buy lower 307s, this could bounce to mid 308s. Therefore, I should be able to get a bounce to at least 308. Like that should be doable. Best case, this bounces to mid 308s, 309. Worst case, this chops around, the ADMA comes down, but I still get that 50 cents dollar bounce from 307 to 308, where you still, even in that, like I said before, those big extensions, you could bear flag and keep going down, but when the extension really is that big enough, even that bear flag is still going to have your dollar or bounce or so that you need. So you do it the first time. I think I got filled lower 307s with a target of 308 for some, and then I was ready to buy more. I was probably doing it like every 50 to 60-ish cents again, saying, all right, I got $2 of room up to the ADMA. I should be able to get a 50 cents to a dollar. So that's where, again, so 307, mid upper 306s, then you'd be, 2.5, almost getting to 3 points extension down there. And yeah, I just if this just kept spilling over, I just would have been small enough to be able to keep adding and keep adding. Where eventually you're gonna get that 50 cent a dollar pop, and you just like gotta believe, like you just know that this extension thing, like it happens. It works. You just gotta believe. Like I don't know how else to explain it really. Um, because again, the way I do this more often than not, like on this candle, I'm buying low 307s, I'm selling 308. There's a lot of people out there buying 308 because they're waiting for this green candle to come in, and then they're buying 308 after this green candle comes in, and I'm already selling to them and I'm already walking away. And the worst problem for me is I miss out on a bigger rally, but that wasn't the game plan in the first place. That's like the worst case. And then best case for me is I sold, they bought the top, this ends up bear flagging, and then, they get pushed out. So yeah, that's walking through kind of an extension trade. It's like a very touchy subject because I know there's a lot of new traders in here too, and this is not something that new traders should try to do. Please don't try to. If you're trying to, do it with really small size, please, because you're gonna try this sometime and you're gonna not notice. You're gonna think you have 5 minute extension and you're gonna not notice that you don't have daily extension. Which last Thursday I think the Qs did have a little downside. What did they look like last Thursday? 322, 323. No, I think it was IWM. It was IWM downside extension with the Qs holding in, which is why I was buying QQQ downside extension because they had enough extension on the intraday, but on the daily it was like coming into support, which that's a beautiful trade, down intraday extension into a daily level as opposed to just extension on everything. So yeah, but yeah, just it's not beginner trading. Trading without an out is not something that we encourage to do. But at the same time, like I've said before, the people really moving money out there, not that they're not trading without outs or anything, but they're not necessarily buying stocks with 10 cents of risk every day either. They can stomach some volatility. So, but yeah, so that's extension. I love it. I'm trying to get better and better at it. It's something that I find is just a great edge. It's, you make your 50 cents, your dollar, you get out. But if you can do it consistently, again, the idea that I like it so much because it's such a scalable thing. Like I'm doing it with SPY and Apple and QQQ. I could buy 100 shares, I could buy 1,000 shares, I could buy 5,000 shares, I could buy 10,000 shares, whatever, and make my 50 cents, and then I could easily sell that 5,000 shares and be out. You know what I mean? So yeah. Do I? Yeah, it depends. More coffee. It depends. It depends. If it's random, then probably not. But if it's something like, the market is extreme downside extension on every time frame and you got that real daily, if you have the daily extension that's enough, then yes, because at that point it'll be a daily trade, which at that point I'm not using an out on the 5 minute because it's a daily chart trade anyway. So yeah, it depends. More coffee. Sometimes I do. Sometimes, yeah. And more often than not, some of the best buys are on these extensions. That's what I did with JP Morgan last Friday. I failed, like when SPY made this, I was doing it with like some like Amazon and Google and AMD, and I sold those names to her. I'm still kicking myself for selling Amazon. That I'm not sure if I'm gonna be able to get back from under 90, but so yeah, depends. But like if it so as opposed to last Thursday, when it's just like QQQ intraday extension into daily support, I'm not holding a runner in that because this is a 50-50 neutral chart to me. I mean, it's a bullish chart, so maybe I could try to hold some, but it's not in a place where I want to really try to swing QQQ. I usually only like to do that in, fear. So yeah. What's my percent win? I have no idea. I would think it's really high. Yeah. Honestly, Mike L, I would say it's pretty high. It's not like big. Not necessarily. I'm trying to get it to be a bigger money thing, bigger dollar thing too, but it's not necessarily big dollars either. Like those 5-minute extension things are not my big winners, but it's consistent cash flow. And it can be scalable that I want to get a little bit bigger and better with doing it. So I can try and really like call them out more too. I've been calling them out, but just trying to be a little bit better with it. But yeah. So what's the percent win? It's high. What's the percent that my first buy is the bottom? Definitely not that high. Definitely not that high. You know what I mean? So, for whatever that's worth. Sebastian, what trades did you make today, or what were you looking at intraday? I kind of talked about it earlier. I was mostly focused on shorting the market today, honestly, Sebastian, because of what I was saying earlier with the VIX. The market was more. There's a couple things, the IWM too, I guess I didn't really say, but this morning the market was more or less going sideways, while the VIX was like kind of going like literally parabolic up, while the market would move sideways. On top of that, the IWM was really weak today too, and this is just a perfect example of why, if you want to short something, short relative weakness. If you want to buy something, buy relative strength. And here I am all day shorting the QQQ that, kind of ended up working. Like I got the 314, but I mean this IWM had the relative weakness and that short would have worked better. But yeah, this IWM also relative weakness throughout the morning, kind of keeping me with some conviction that the market should try to have a little bit better of a rollover. So yeah, and I didn't go into today planning to short the market. It was seeing what the VIX did this morning. It was notable. It wasn't like one green 5-minute bar. Like it was pure. This is the VIX since yesterday afternoon, this morning. It's just doing nothing, and then it just explodes up. Like it was very notable. So yeah, so that's what I was focused on today. Didn't plan on doing that. Didn't necessarily risk a lot. Didn't really make a lot either. So I don't know, whatever. What else, guys? It looks like that's all. I got through everything. I guess it's 5 o'clock already. Anyone else have anything else? Otherwise, happy to wrap it up. And I guess we got PCE tomorrow. Not seeing anything. Alrighty, so yeah, strong markets, choppy, gappy market. Again, we have gapped decently and been choppy intraday every single day this week while we break out. So that's kind of annoying, but it is what it is. We'll see how they gap us. We're slightly overbought going into PCE. That might push us into getting actually overbought, or PCE might just cool us back off. So yeah, we'll see how they gap us and go from there. Have a good night, everyone.